This short video will give you a real quick tour around the closing disclosure form, which you will be provided before your closing, and then you'll sign it at the closing. But this is the one form where really all the numbers around your transaction are going to be located. You can find everything quickly here, all the pertinent features of your loan and the transaction to purchase your home or do a refinance. So let me share my screen with you real quick and we'll walk through this form. So here's what the closing disclosure looks like. And I want to tell you that this is just an example form. I pulled this off the government's website. You can see when we start getting into this, you'll see the dates are old. So this is just a made up form. I'm just trying to walk you through what the form looks like. And just know too, as we go through this, some of the fees and stuff you'll see are not really pertinent to North Carolina, as this form is used throughout the U.S. by all lenders. It's required. It's a required government form. The other thing I would tell you too is this form is formatted to be able to match up with the loan estimate that you were given at the beginning of your application process whenever you found your property. Here's what the loan estimate looks like. Here's what the closing disclosure looks like. That is done for a purpose so that you can hold those two forms up side by side when you get to closing and see what matches. Although there's another section in the closing disclosure that shows you anything that was changed, but they're meant to be able to, for you to put them side by side and see, what has changed in this transaction since we started the process. Okay, so let's look at the closing disclosure. This top section here has got your pertinent information as far as the issue date, the day of your closing, your property address, your settlement agent, who is going to be handling your closing in North Carolina. That would be your closing attorney, your sale price, how much are you buying the home for? We've got borrower and seller information as well as the lender name there. And here's the pertinent loan information. You're doing a 30-year loan. In this case, it's a purchase, not a refinance. It's a fixed rate. And this tells what type of loan you're doing or what loan program you're using. Is it conventional? Is it a VA? Is it a USDA or whatever? You would have your loan account number there. And then this first tab here has got your loan terms. So they start with the most important stuff. So your loan amount is how much you're borrowing. In this case, you can see the sale price is $180. These individuals are buying the home for $180. They're borrowing $162, and that means they're doing a 10% down payment or $18,000. This is their interest rate. This is their monthly principal and interest note. This does not include any of the money in there or the amount of the payment that is set aside for escrow, for taxes and insurance. We'll get to that in just a minute. This is only principal and interest. This is what is in there. This is the monthly payment that pays back the loan. Prepayment penalty, and then a balloon payment. And you'll notice this question here, can this amount increase after closing? No. Does the loan have these features? So this part up here is going to tell you, for instance, on your interest rate, can this amount increase after closing? No, this is a fixed rate loan. If it were a variable rate loan, the answer to that question would be yes, because it could increase after closing. Also, the answer to this question would be yes. Monthly principal and interest, can this increase after closing? Yes, it can. If you're doing a variable rate loan and the rate goes up, then yes, the payment can increase after closing. But in this case, it's a fixed rate, as we know from this section up here. So the answer is no. Does the loan have these features? A prepayment penalty. That is highly unusual to have a prepayment penalty. So you should expect to see a no there. And same on the balloon payment. A balloon payment is typically used more on commercial loans, but this is where the lender could decide, or there will be a period of time after which the loan balance could balloon, and that means you've got to either pay the loan off or refinance it somehow into a different type of loan. Again, that would be highly unusual on a residential mortgage, so you would expect that answer to be no there. This next section is very important, your projected payments. So you can see this is broken down between years 1 through 7 and years 8 through 30. Why is that? Well, again, these buyers are only paying a 10% down payment, so they have some monthly mortgage insurance in here, which you can see right in this section. Mortgage insurance, $82.35. But this being a conventional loan, that mortgage insurance is going to drop off once they reach a certain percentage of the value of the home. And it looks like based on this, it's going to happen after year 7. That $82.35 is going to go away, and the projected monthly payment is going to go down. So you can see here, they've got the escrow in here. 206.13, that's for the property tax and the homeowner's insurance. Okay, so I've got all this totaled out here. This section here, estimated taxes, insurance, and assessments, basically your escrow, 356.13. Well, wait a minute. Why is that 356.13 and this is only showing escrow as 206.13 up here? Well, the difference there is, you'll notice down here, this particular home has homeowners association dues. So typically the HOA dues are not escrowed. You would be paying that separately to your homeowners association if you're in a townhome or a neighborhood that has an HOA annual fee or monthly fees. It was probably an annual fee, but the monthly amount is how this is broken down. So that's not going to be escrowed, but this is informing you, you still have that has to be paid. You won't be paying the lender for that. You'll be paying your HOA association, but it's there. It's a cost of owning this home. And that's why you see that in there. And you can see the boxes checked there. Also see escrow account on page 4 for details. We'll look at this in just a minute as well. And then down here, costs at closing, your closing costs. So note that this includes, as it says here, $4,694 in loan costs and $5,018 in other costs. We're going to look at that breakdown. This figure right here includes all the monies for any fees, any services, any inspections that you would have done as part of this closing. It also includes your prepaid items, which in many cases is stuff that you would have even if you weren't getting a loan, like your homeowner's insurance. You pretty much have to have that. If you have to pay flood insurance, your property taxes, those type things are all in that figure as well. And then your bottom line cash to close figure, this tells you exactly how much money you need to bring to closing down to the penny. This is including your down payment money plus these closing costs, but subtracting out any monies that or any credits that you might be getting from the seller for closing costs, or any deposits you've paid up front, any earnest money you've paid up front, or any of these fees that you've already paid before you get to closing. Okay, so that's page 2 or page 1 of the closing. Page 2 gives you a breakdown. I'm not going to go through a great detailed analysis of this, but you can see the top section here. These are really your lender fees if you're paying points, or if you have an origination fee, which is typically what we see in North Carolina. Here, this is reflecting an application fee or an underwriting fee. Is kind of the same thing. The second section here is services that the lender is required to have done on their end to make the loan approvable, like the appraisal, getting the credit report, there's a tax status fee there, flood determination, that sort of thing is all plugged in there. You can see in this case, these folks have already paid for the credit report fee right here, and then someone has already paid for the appraisal fee as well outside of closing. Services that the borrower did shop for. So this would be stuff that you and or your real estate agent would have done on your end. Much of this stuff is optional. It's not necessarily required for the loan. Check with your lender to find out what is or is not required. But most of this stuff would not necessarily be. The pest inspection in many cases is not required. Survey in many cases is not required. The rest of the stuff, the title, obviously you do have to have a title insurance, but this would be a situation where you will pick the settlement agent or the attorney that's going to be handling the closing, or your real estate agent will. So that's why it says services the borrower shopped for, because you have the option to use any service provider or attorney that you want to in that case. So all that's going to get totaled up here. Here's the other costs. You're recording for the county to record the new deed and the deed of trust or the mortgage. Your homeowner's insurance premium. Of course, you'll shop around, or you have. In this case, we're already to the closing disclosure, so you've shopped around for your homeowners. You've picked the agent and the policy you wanted. Here's your prepaid interest. So keep in mind, from the day you close, in this case, the closing date is on 4/15. So again, this is a really old form from 2013, but you close on 4/15, you would not have a payment until June 1st. Interest is paid in arrears, so you're going to owe some interest from that closing date until the end of April, and that's where that comes in. Your property taxes, you're going to put some money into, I guess this is your property tax for the first 6 months on this particular property. In North Carolina, it's paid once a year. You're going to put some money into your escrow account for next year's homeowner's insurance and taxes, and that's the figures you see here. And then some other stuff here to do with your homeowners association, your home inspection fee, warranty fee, the real estate commissions you can see are seller paid here. So those are all over here. And then that's all totaled up to this subtotal, and then add those two figures together, and that is where this closing cost figure comes from. The next page, page 3, at the top here gives you a comparison between your loan estimate and your final closing disclosure. That's what I was talking about a little bit earlier. So you can see what has changed since the beginning. So you can see for some reason here, the closing costs went up a little bit. The down payment stayed the same. These folks did a $10,000 deposit. Some things changed here with the seller credit and some other adjustments. And then here's kind of a balance sheet of everything. You're buying the property for $180. These are your closing costs. You've got some HOA dues that you've got to reimburse the seller for. All that totals up here. You've already made a $10,000 deposit. You've got your mortgage for $162. Sellers are giving you $2,500 as a credit. You're getting a rebate, some kind of a rebate on the title. And the seller is, because the attorney is prorating the property taxes, the seller is giving you a credit for some monies that you will be paying on their behalf for their time of ownership. And then it all is reconciled down here. And that's where we wind up with, again, that $14,147.26 figure that you saw right back here on page 1. Page 4 just gives you some additional information about assumption and tells you whether this loan would be assumable or not, whether it has a demand feature. Again, that would be really unusual. What happens if your payment is late? What's the late fee? Negative amortization, partial payments. This is a question I get a lot. Most lenders will not accept partial payments. What does that mean? Well, if your monthly payment is $1,000 and you send them $300, they're not going to apply the $300 until you send the other $700. They're just going to hold that $300 until they get the other $700 to make a complete payment, and then they'll apply that to the loan. So just know that, if you're interested in that, you would look at this section. In this case, it says the lender may accept payments that are less than the full amount due. Most of the time, lenders will not accept partial payments. This is a little description about the escrow account and how that works. And then the very last page here is the one that's got some calculations. This is kind of the ugly figure page if you look at your total of all payments. But I always tell my clients, don't put a lot of weight on this, because these figures are all assuming that you're going to keep this loan for the full 30 years. And let's face it, that's unlikely. Most folks, I think in the United States, the average length of time that a 30-year loan is actually held is somewhere between 8 and 10 years. So something else is going to happen. You may decide to sell the home. You may decide to move. You may decide to refinance it, or whatever the case may be. It's highly unlikely you're going to have the loan for the full 30 years. But if you did, this is how much you would pay back. This is how much in interest you would pay if you made every payment on time, and not early payments, not extra payments or late payments or anything like that. Any of those things can affect these figures. As well as your annual percentage rate. I'm not going to go into what that is. I've got a different video explaining APR, so you can check that out if you want. And then it tells you some other stuff here about the appraisal, what would happen if you were to refinance. And then lastly down here, this was a positive change from a few years ago. It's got contact information for everybody that's involved in this transaction. Your lender, or if you happen to be working with a broker, that person's name and contact information would be here. And then the two realtors or real estate agents for the buyer and the seller, and then the settlement agent in North Carolina, again, closing attorney. You sign it and date it down here at the bottom. That your official signature will go on this form at closing. So I hope this is helpful to you. If you have specific questions about your closing disclosure, please feel free to reach out, and I'll be glad to answer any questions you have. Thanks a lot. Talk with you soon.